When we're trying to find support and resistance zones, it's really important that we keep things simple. That's one thing that I like to tell you guys is try to keep trading simple. Do not bombard yourself with so much information that you end up not even learning anything. All right? Watch this video about support and resistance, and I promise you, if you go apply it to your own charts, you will see the difference. First of all, we start on the weekly time frame. Why do we start on the weekly time frame? Because we want to look for trending markets. We want to look for markets that are trending either upwards or downwards. We are currently trending upwards. Why do I say that? Is because we've actually had price do this. Now, if I just move this right here, make it a little bit more clear, this looks like, hey, we've actually been able to push above. We've been able to push above. Look how simple that looks. Does that not look really, really simple? Because it's supposed to be simple. As of right now, we know, hey, AUD CAD is starting to push to the upside. So what could we possibly wait for next week or maybe January is a push up, a come back down to this area of interest, and then another push up. We could possibly buy at this area of interest. That is great. If you want to take this and hopefully next month in the brand new year, this works, great. Take the trade. But I want to show you a little bit more in depth on how this actually works. So I want to show you this right here. I'm going to draw an area of interest right here. Why am I drawing it right there? First of all, we need trending markets. I know some of you are looking saying, hey, look, we've been pushing down. Well, how is this an area of interest? How is this a trending market? Obviously, we see that, hey, price did push above. But let's just say that we weren't looking at that. Let's just say we were right here. Let's say we were right there. All right, great. Could this be a reversal? It could be. Yes, it could. You want to know why? Because if we just look left, we see, hey, this was the last time price had a great level where price has rejected. And if we just move the area of interest to the right, what do we see? We see, hey, price entered this area. We had a rejection to the downside. We had price push back up, price push back down, and then we had a very strong push back up. This tells me, hey, look, first of all, we're changing market structure. We are changing market structure. We've been having a set of lower lows, lower highs, lower lows, lower highs, lower lows, higher high, higher low. This higher low tells me so much already. It already tells me so much that, hey, look, we could start having a push to the upside. And this is on the weekly. This is just on the weekly. Of course, we're not taking our trades on the weekly, but we like to have our areas of interest, this gray rectangle, at our weekly and daily levels. That's all we need. So let's go to the daily time frame. What do we see? Right away, what do we see? We see, hey, price has rejected. Oh, we had a break above. And what happened next? We came back down to this level. We had a very bullish candle. We had that 50 EMA coming right underneath price, and price pushed right up. That it's plain, it's simple. That's all we need. That's all we need. And even if I move this a little bit to the left, look at that. We have another rejection from that level. So, of course, we're not taking our trades on the daily. So let's actually go to the 4 hour. Let's see what's happening down on the 4 hour. We see that price has, let me put my tool. We had rejection, came down. We had a strong push up. We came back down to this level. And what did we do? We started to have a push back up. Let's say you didn't enter off of this level. Let's just say that. Let's say that, hey, we had no clue where our take profit would have been, even though we could have just zoomed out and looked left at probably this level right here. And if we actually just take it right here, that actually is a great level. Why? Enter this area, rejected. Push above, came back, rejected. Came into this area, rejected. Came into this area, rejected. We just look left. That's all we do. But let's say we didn't know that. Let's just say that. Let's say that price into this area and we're like, oh, I'm not too sure. I'm not too sure if I should take this trade or not. All right, that's fine. You want to know what we do? Is we wait. We wait for price to have a higher high, higher low, lower high, lower low, lower high, lower low. What a coincidence that this lower low is at a daily and weekly area of interest. Why does that matter so much? The higher the time frame, the better and stronger the area of interest is. Meaning, every time price enters a weekly / daily area of interest, more than likely, not all the times, because this doesn't work every single time, but more than likely, it's going to have a very strong reaction from this level. And what did we have? Price entered this level. Price had a very, very strong bullish engulfing candle, and we just pushed up. All right. So let's actually say we took this trade. Let's say we took this trade. We took the trade right after this bullish engulfing candle. You know what? Let's make it even better. Let's say we didn't take this trade. It's Sunday. Market barely opened at 4 p.m. That's fine. What do? Is we wait for price to come back up, come back down. We retested this area of interest. Look at my arrow right here. That's all we did. And we had a very strong bullish engulfing candle. All right, let's take our trade right there. That's all we're going to do. So let's actually look at this trade. Let's say I took my trade right here. Take profit right here. Why right there? Look left. We rejected. Let's move our stop loss right here. Right here. Why right here? Because if we just look left, what do we see? Let me make this as straight as I can be. We see price has rejected. Price rejected. Price has this little area that we have rejected right here. It's a very small level. So what happened? Even though we did enter drawdown, we entered drawdown quite a bit right here. Price ended up hitting our TP for a 2.11% return on our investment. That's all it is, man. That's all it is. Keep these things simple. So let's make a little recap on what we learned. All right. Where do we draw our zones? We draw our zones on the weekly and daily time frames. That's all we do. And look at this level. Look at this level on the daily time frame. And I'm pretty sure on the weekly, it's this same level where we've had rejection, came back above, came back down to this area of interest and started to push back up. Let's take a look at the daily. Oh, I see. We had a very strong push up. We've been rejecting these areas right here. And what happened? When price entered this area, this weekly / daily area of interest, price had a very strong reaction. So let's go back down to the 4 hour. All right. Again, what do we see? Let's say this looks great. Thursday. All right. Yeah. Thursday. All right. Let's say we took this trade, a very strong bullish engulfing candle, our stop loss right here, right underneath this candlestick right here, and our TP right here. Why right there? Again, look left right here, area of interest. We've rejected. What happened? We did enter in profit. We re-entered in drawdown. This is very important. We hold our trades. Once you place a trade, you either let it hit its take profit or you let it hit the stop loss. Do not get scared. Scared money does not make money. Let it do its thing. All right. Enter drawdown. Came back up in profit. Came back down in drawdown. And what happened? Boom. Pushed right up. That's great. 2.27% return on the investment on whatever you risked. So let's say you didn't take the entry right there. Where else could we have taken the entry? Oh, maybe price re-enter this area of interest, this daily / weekly area of interest. Another bullish engulfing candle, very small. Stop loss is the exact same, this low. Same profit, 3.8% on our investment. That's great. All right, let's say you didn't take that one right here. Another bullish engulfing candle. Let's zoom in. Let's zoom in so you guys could take a closer look right here. I'm taking a trade right after this candlestick. 3.34%. Stop loss the exact same. Take profit the exact same. Right here. That's all it is. Why? Because we're taking our trades based on the daily and weekly time frame. That's all it is. We don't need anything special. We don't need some fancy indicator. All we need is to take our zones at the weekly and daily areas of interest. That's all we need. And then after you draw your weekly and daily areas of interest, then you go down to the 4 hour and try to look for entries. Go down to the 1 hour. Try to look for better entries. Try to look for even better entries. Right here. You could have had an entry right here. This is actually great. You could have another entry right here. And I mean, if you wanted to be a little bit more risky, you could have had your stop loss right here. Let's say right here. You want to be extra risky right underneath this low. It would have been really close. But I mean, hey, 6.75% return because we drew our daily and weekly areas of interest. Again, that's all you need. All right. I hope you guys liked the video. If you have any questions, feel free to comment. If you think I'm doing a bad job, feel free to comment. I am trying to do better. I will continue uploading videos. I want to help you guys as much as I can. I know that you guys can make it. You guys can become profitable. Thank you. Like the video, subscribe. Thanks for watching.